Welcome to another technical analysis tips and tricks video. Thanks for tuning in. Today I'm going to be covering Heikin Ashi Candlesticks. I'm going to briefly go over how they're calculated, what their various applications are, and how you can use them to make yourself a better technical trader and chartist. So quickly I'm going to go over how they're calculated. The opening of a Heikin Ashi candlestick is actually formed by taking into account the previous candles open and close, adding them together and dividing it by 2. The close of the candlestick is going to be an average of the high, open, low, and close of the candle divided by 4. So you add all 4 of those together and divide it by 4. The high of the candlestick will be the highest recorded value of the candle in its current period, and the low will be the lowest recorded value of the candle in its current period. Basically what this does in a nutshell is it applies a moving average type effect to the actual candlestick. It does this by eliminating a lot of the noise you can see whenever a asset or a commodity, or in this case I'm looking at Bitcoin, whenever the price starts to get really volatile and whipsawing up and down, you'll see a lot of smaller candles and the price kind of going up and down very radically. If you use Heikin Ashi candles, it smooths out a lot of these smaller moves and gives you a better picture of the overall direction that the price is heading. I have the Heikin Ashi candles pulled up in a window and the regular candlesticks pulled up in the window above it, so I can quickly show you what I mean by this. So you can see here that the price of Bitcoin was going down along this stretch from 19.4 thousand to about 7.5 thousand. In this little drop right here, you can see that there's many green and red candles all over the place. They're kind of jumping up and down. They're doing a lot of different things. Some periods were more volatile than others, some were more calm, but it's hard to gauge the overall direction of the price whenever the candles are jumping around like this, basically. So if you apply the Heikin Ashi candlestick formula to the candles, it gives you a better sense of where the price is actually heading. You can see on this down stretch right here, in particular, so from about, what was this, 14,000? Yeah, 14,000 to 7.5 thousand. You can see a lot of smaller green and red candles jumping up and down, kind of making its way down. But there could be a lot of false signals here for somebody that's trying to read the chart purely based on the candlestick information. The Heikin Ashi candles eliminate a lot of those smaller green jumps you would see in the overall downtrend and smooth that out to give you the information that you would need to determine whether the strength of the trend is changing or it's remaining the same. It's very simple how the Heikin Ashi candles are colored. If the open is greater than the close of the candle, then it paints it red. If it closes higher than the open, then it paints it green. And that's true for every single candle. So as opposed to normal candlesticks where each candle is kind of its own independent variable, it just records the information in the session and then it moves on and the next candle is determined independently. The Heikin Ashi candles are going to take into account the previous candles in the previous sessions and the previous data that occurred. I'm going to give you an example of why this can be beneficial to somebody who is swing trading or pivot trading or trend trading, not necessarily day trading. And the reason that day traders don't like to use Heikin Ashi candles as often as a swing trader would, or somebody who's taking longer stances on positions, is because since the Heikin Ashi candles are taking into account the previous candle's information before it paints a new candle, it can give you a sort of delayed signal or a delayed effect in the price action. While this does make it harder for you to determine what's happening in the instant, in the now, and you're down on 5-minute candles, 30-minute candles, if you zoom out to say like 4-hour charts, 12-hour charts, 1-day charts, it gives you a slower but a lot more stronger identification of trend reversals. And you can see that here. You see on the normal candles, you have your green candle, your red candle. It's ultimately going down. A red candle, a green candle, and then it sort of starts to bounce up, right? But on the Heikin Ashi candle, you have this continuous downdraft of red candles, and then you have the exaggerated wick. The wicks on the Heikin Ashis are more important than the wicks on the normal candles because since we are calculating the highs and lows on the candles differently, those wicks are actually a lot stronger than a normal candle's wicks would be, where a normal candle's wicks, would typically be a range of lower volume, but where the price extremities were for the period. That's not always the case for a Heikin Ashi candle. Since we are taking the highest value of the candle and making that the high, and the lowest value of the candle making that the low, and then the close is actually a combination of the high, low, open, and close divided by 4, the wicks give you a good indication of how strongly the price was pushed in the opposite direction of where the wick is, if that makes sense. So you can see there's a long exaggerated candle right here on the bottom, but the body of the candle is pushed up. So this would tell you in a Heikin Ashi candle that there was a lot of range in this period, but ultimately the price was pushed higher than it normally has been going in the trend. So in this case, the downtrend. This candle in particular was pushed higher than the previous ones, and that's a good indication of a reversal if you're using Heikin Ashi. You would call these little guys fractals. You can Google that if you're not too familiar with what a fractal is, or I'll be covering it in a later lesson. So as a pivot trader, this is going to give you a delayed but a lot stronger and a lot safer indication that the price might be reversing into the opposite direction of where it was once heading. It also helps a lot with trend lines. So you can see I drew the same trend line across the same price range here. I drew it on normal candles and I drew it on the Heikin Ashi candles. Basically, if you draw a trend line on normal candles, you can get a lot of these little false breakouts, is what I would call it. You can see this little candle right here popped above, it closed above, the second one opened and closed above, but then it ultimately dropped back below the trend line before continuing down under this resistance line. On a Heikin Ashi candlestick, you can see that since it does take into account, like I said, the previous candle, those candles never got a chance to close above the resistance line. So that would give you a stronger indication of how strong that resistance line actually is. The normal candle popped above and then ultimately dropped back down, but the Heikin Ashi candle stayed below. It retraced below the resistance line and went about its merry way on downwards into the dumpster here. So those are just a couple of the quick strengths you can see just by looking at the candles themselves. I do have a indicator here pulled up. This is the directional movement index, and I'm going to show you how using Heikin Ashi candles and normal candles can actually give you different readings and an indicator as well. So I have the normal candles pulled up here, and you can see the negative DMI, or the negative DI on the DMI is currently reading about 31, and the positive DI is currently reading about 9. If we switch that to the Heikin Ashi candles, those readings are going to actually change, since the candles itself is actually changing. The information that we're recording is actually changing. That negative DI actually goes down to 24, and that positive DI goes down to about 5. So not only is it changing how you're visibly taking into account the price information, but your indicators are actually being calculated differently. And what this will do is it will give you more so than not less signals. Maybe if you're using the DMI, for instance, I'm using the DMI as an example. If you're using the DMI to generate buy and sell signals, you're going to get them a lot less frequently than you would on normal candles, but when you do get this signal, it's going to be a lot stronger than it would on normal candles, since it's going to be identifying an overall trend and not the individual candle itself. One thing you do need to worry about with Heikin Ashi candles, though, as I mentioned earlier, since they are delayed, it's not a in-the-moment price that you're getting. There is something called the Heikin Ashi price. And if you're on TradingView, you can actually go up here to settings, and you can look in the style settings, and there's an option here that says show real prices on the price scale instead of Heikin Ashi price. So if I click that, you can see this price on the right disappears. The 6,923, that's the Heikin Ashi price, not the actual price of the asset. That 7,012 would be the actual price of the asset in the period. But since we're averaging those values together, the Heikin Ashi price is recording at 6,923. It's not a huge deal. It's just something that I want you to be aware of. The price is a little delayed because of the smoothing or the averaging effect that the Heikin Ashi applies, and therefore the prices will be a bit delayed and a bit different than what the normal candle is showing. However, you can just either turn that off if you don't like it, or take into account what the normal price is, and that can give you a little bit better indication of the lag effect that I'm talking about in the Heikin Ashi's recording. So basically that's about it, guys. I love Heikin Ashi. I'm a swing trader. I'm not too much of a day trader. If you're a day trader, I would advise taking into account Heikin Ashi candles maybe on a larger time frame, but like I said, they're not particularly better for lower time frames, since the price action is delayed when it's being recorded into the candlestick as they form. This is better for pivot traders, swing traders, trend traders who are taking, multiple days, sometimes weekly positions, and looking to capitalize on the reversal of overall trends and not paying attention to much of the noise. If you enjoyed the video, feel free to like, share, subscribe. I'll be bringing more content like this in the future. Comment if you want to talk about anything I talked about today, or if you have any comments on how I presented something, any input. I always love to hear it. If there's something you would like me to cover in the future, also feel free to drop that in the comments below. I'm always here to help, and I will be making more of these as time goes on. So thanks for tuning in, and I'll see you guys next time.